So we'll start with chapter 3 today. Chapter 3, the more or less the background of which relates to essay 315, right, and essay 330, which we have done already. So more points, more topics, and instead more concepts also we have to see now. The first page deals with basic concepts of inherent risk, control risk, and detection risk. So I have already explained these three concepts to you. I'll just quickly revise it and will give it to you for giving it a quick read. So inherent risk is nothing but susceptibility of risk to either a class of transaction. That means I told you, for example, debtor that belongs to which class, that belongs to which assertion level. It belongs to account balance level, right? Account balance level, that means what? Balance sheet level pay. Balance sheet level pay. So debtors here we are deal we have to deal with which assertions? Assertions relating to right on obligation. Similarly, assertion relating to existence, whether the debtor exists or not, whether the debtor is completely accurately recorded or not, whether the debtor, the rights and obligation is us only, the rights on the debtor is of us, right? So similarly, all these assertions, there is a susceptibility of risk that there might be certain misstatement, either individually or when aggregated with other misstatement. It is a material misstatement without any controls, without any controls. So without any controls, that is what inherent risk. However, when you apply the controls to mitigate this inherent risk, I gave you an example. Out of 100 items, suppose there are 40 items, I know that there will be an they will be susceptible to material misstatement either individually or when aggregated with other misstatement. So that means what? Inherent risk will be my how much? 40%. Similarly, I applied controls on the financial statement items so that I can mitigate those inherent risks. And suppose the controls were able to mitigate effectively by 75%. That means what? Out of 40, my 75% misstatements are reduced. My 75% misstatements are reduced. That means 30 misstatements are reduced. I am left with how much? 10. I am left with 10 misstatements. So 25% is my what? Control risk. 25% is my control risk. That means what? Susceptibility to class of transaction, account balance, or disclosure level, or financial statement as a whole to a material misstatement, either individually or when aggregated with other misstatement, where controls are not able to prevent, detect, or correct the misstatement. Where the controls are not able to prevent the misstatement or detect the misstatement or even correct the misstatement either individually or when aggregated with other misstatement. That is all control risk. Similarly, detection risk is after you have applied everything and on 10 items you further want to reduce the risk of material misstatement. So suppose auditor now started their audit procedures and they were able to reduce the misstatement by 70%. That means what? Detection risk is how much? 30%. That means 30%, 30% of the items in the financial statement, even the auditor's procedure will not be able to detect, prevent, or correct. Even the auditor's procedure will not be able to prevent, detect, or correct the misstatements. That means my detection risk will be 30%. Detection risk is 30%. Overall, if you say my inherent risk was how much? 40%. Control risk was 25%. And detection risk was how much? 30%. Therefore, my ROMM, risk of material misstatement, I told you it's what? Inherent risk into control risk, which is coming out to be 10%. Which is coming out to be 10%. Similarly, audit risk. Audit risk is means in the entire audit, in the entire 100 items of financial statements of audit, there is a chance that there will be some misstatements either individually or when aggregated with other misstatement, either individually or when aggregated with other misstatement, and that is amounting to how much? 3%. That is amounting to 3%. Audit risk. What do you mean by audit risk? Important. Audit risk is nothing but a risk of expressing an inappropriate audit opinion on the financial statement that are materially misstated. That means what? You should have give your opinion as unmodified report. You should have given your opinion as unmodified report. However, you gave clean report. However, you should have given your report as modified report. However, you gave your clean report, or however you gave your unmodified report. That means there were misstatements either individually or when aggregated with other misstatement which affect the financial statement as a whole or assertion level, and which entails you to give your modified opinion or any sort of modified opinion. However, you gave your inappropriate audit opinion, which is clean report, clean opinion. So that is what is audit risk. Audit risk is that even after performing the entire audit, I'm not able to give a appropriate audit opinion. I'm giving inappropriate audit opinion. Now they have given only what expressing inappropriate audit opinion, but I have given what I told you. What inappropriate here will be what you should have given unmodified. However, you gave. Sorry, you should have given modified. However, you gave unmodified. Now, is there can there be a case where you should have given unmodified, however you gave modified report? Will that also be considered as inappropriate audit opinion? Inappropriate audit opinion, can you give that, where you should have given unmodified opinion? That means in essence incorrect, there were no misstatements in the financial statement, however you gave modified opinion. Yes, no, right? Why, Arya? Okay, Sagar, why? Forgot what?
So I think under reliance and over reliance something.
The reliance.
If we, if I forget the concept, it's just if we.
Actually, once you give your opinion, you will draft an audit report, right? So when you draft an audit report, then you will discuss also with the management. Why will the management allow you to give modified opinion? Why will they allow you when they'll simply say that this is not a misstatement, this is not material misstatement. You should give clean report only. And in the actual also in the provision as per standards on audit and everywhere, you should have given clean report only. How can you give modified report, which is not allowable standards, which will not even be allowed by the management? Although you can override the management, but how you will be discussing it with, so there is a less likely or very less chance or even no chance, I can say, where you should have given unmodified, however you are giving what modified report. Okay, but the otherwise vice versa case is possible, and that is why we call that as inappropriate audit opinion. Inappropriate audit opinion. Inherent risk, you can just go through that commentary also, please go through this. Control risk is what? Control risk is the risk that entity's internal control system will not be able to prevent, detect or correct on a timely basis any misstatement that could be material. Detection risk is the risk that auditor will not be able to detect. Auditor will not be able to detect existence in the assertion that could be material. Detection risk for an audit risk bears inverse relationship. How come? So what do you think? Audit risk, or you can say what? Total overall audit risk. If you want to decrease total overall audit risk, you can increase your, sorry, it's with respect to ROMAM actually. So ROMAM, if it is more than what you expected, then you can reduce your detection risk. You need to reduce your detection risk so that overall audit risk is at par. Overall audit risk at par. Similarly, if the ROMAM is already less, then you can assume a bit higher detection risk by performing low further audit procedure, and thereby overall audit risk is at par. Overall audit risk is at acceptable level. So detection risk for an audit risk bears inverse relationship to the risk of material misstatement at the assertion level. Important points which I have already told you. They also asked one question, 5 mark question on this, where they have asked you to calculate inherent risk, control risk, detection risk, and overall audit risk, risk of material misstatement, right? So risk of material misstatement is nothing, I told you, inherent risk into control risk. And audit risk is what? Inherent risk into control risk into detection risk, or you can say what? ROMAM into DR. ROMAM into DR. Audit risk has two components, just like this is the first component, ROMAM, and the detection risk is the second component. So ROMAM is the risk that the financial statement contain material misstatement, and detection risk is the risk that the auditor will not be able to detect such a misstatement. So risk that there will be a misstatement in the financial statement is the risk of material misstatement. ROMAM. Risk that there will be a risk in the there's risk that there will be a misstatement in the FS. However, that we as an auditor will not be able to detect those misstatements is what this auditor's risk, or sorry, detection risk. So quickly just come to here, assertions about class of transaction and events. So class of transaction, I told you, class of transaction relates to which level? Profit and loss, right? So profit or loss item example, let's pick up revenue. So when I am showing that revenue is my 1.189 billion rupees or 1.189 crore rupees. That means I'm showing as what? Yes, the revenue is accurately recorded. Yes, the revenue occurred during the year. No, it's not something which is just made up. It's occurred, actually occurred during the year. It's completely recorded. No point of it being unrecognized. Every revenue, each and every point is recognized and completely recorded. Cut-off transaction, cut-off procedure has been properly applied. That is, cut-off means what? As at 31st March, before all the invoices, goods which we have received, that only we have considered as expenditure, or whatever sales you made before 31st March, that only you have considered in your sales and not more than that. That is, your cutoff procedure is properly applied. That is the assertion. I told you that class also. Assertion means what? To assert. That means Kapil told us what? Assertion or assert means to confirm करना है, right? दावा करना, दावा, that's what he said. So here the management is saying that yes, we are accurate, we are occurring that the revenue during the year occurred actually, and since it is occurred, we have recorded it completely, even with the cutoff procedures and a proper classification. That means what? Other income, all items of other income has been classified as other income only, and whatever revenue from operation or sales you have operated or you have disclosed or classified under revenue from operation only. So that is your classification as well. So proper classification is there. Management is asserting in the case of class of transaction what all items? AOC3. 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 I hope everyone's clear with this. Similarly, at account balance level, that means I told you what? At balance sheet level. So at balance sheet level, we are dealing with what? VCER. That means valuation, completeness, existence, rights. So suppose again example, if there is an asset. So we are asserting that as a management, we are asserting that yes, asset actually exists. Actually, as it is not just on the books, it's actually there as well in the physical presence. Similarly, assets rights is upon us only, is of us, and obligation is also upon us. Any sort of asset or whatever manner we can record that in complete manner, we have recorded it completely. And lastly, every valuation that we you see in the balance sheet is proper. Valuation is also correct. And lastly, PD is what? Presentation and disclosure. So here again, AOC2 plus valuation, except which C, except cutoff. Clear? Any doubt? Any doubt here?
No, sir.
चलो फिर. So this also we have discussed this point as also, that we have to assess ROMM at two levels. One is financial statement level, another one is was assertion level. Do you remember SA 315? Why are we assessing the ROMM at assertion level? Quickly tell me anyone, why are we assessing ROMM at the assertion level? Assertion level पे क्यों ROMM को assess करना है? As class of transaction, account balance or disclosure level. There was a line given. Why are we actually doing that? You can go through SA 315 also. To determine the NTA of FAP, correct? Correct, Sagar. To determine the nature, timing, and extent of further audit procedure. How are you going to proceed further with your other audit procedures, further audit procedure? For that matter, you have to assess ROMM at assertion level also, right? You have to assess ROMM at the assertion level. So now we'll come to steps for risk identification, which I believe is an important question which can be asked to you anytime from chapter 3. Whatever 4 question we are gonna do now are very important for me, because this risk-based audit, after this risk-based audit approach was changed significantly. Not significantly, but yeah, stepwise they have changed it, and till now it hasn't come as of now till exams. So it may come in exams. However, they have given this in MTP RTP. So that is there, but till now it hasn't been asked in the exam, even after changes. So that is really, really important. So come to steps for risk identification. How will you identify risk? Yeah, anyone? We have discussed this in detail. Same process we have to apply. Same. Firstly, not if not, even if not the process, but you can discuss at least few points which are coming in your mind. Yeah, how are you gonna identify the risk? Risk identification. Check the internal control system. Okay, that means you want to check that internal control systems are operating effectively or not, or whether you want to check that are they adequate or not. There is a difference, I told you, right? Adequacy of internal control system versus operating effectiveness of internal control system. What do you want to check then, Lakshmi? See significance of risk. Yeah, Sony, correct. How important is that risk, right? Risk that sometimes it could also be risk that requires special audit consideration. Do you remember risk that requires special audit consideration, Sony? What were the points for that? Puja, test of control we won't be doing here. Yeah, Sony, do you remember risk that requires special audit consideration? Significant risk.
Sir, I'm not recalling it.
It was with respect to risk of fraud, related party risk which pertains to related party transactions. Now, yeah, anyone else? Yeah, I told you this is very, very important exam question which I've asked multiple times. So couples write unusual related party को CDEF आता है, not ABCD, right? Unusual related party no CDF but not ABCD. So unusual say unusual relationships or transactions. Related party से related party transaction. C D E F C से complexity of the transaction. D से degree of subjectivity involved in any transaction. E for recent economic accounting developments. And F से risk of fraud risk. So here we are going to assess first, as Sony told, which risks are very important or significant risks for which we need to require or we need to apply our mind or professional skepticism behavior, attitude of professional skepticism. So impact of its occurrence and revised materiality accordingly for specific account balance. Then we have to determine that once we have assessed that yes, this risk is important for me to monitor it, to monitor that risk, yeah, that risk is important, but now I'll check that what is the probability that this risk will actually realize. That means this risk will actually happen. What is the probability, likelihood of assessed risk to occur, and what is the impact on its audit procedure. Again, if it occurs actually, then what will be the impact on its audit procedure. Similarly, consider the impact of risk on each of assertions. So now that suppose it actually occurs, so what is going to be the impact on class of transaction, account balance, disclosure level, everywhere wherever you can see the impact of the risk, you'll have to assess what is the impact on each and every assertion. So again, let's recall. First was to assess how significant is the risk. Secondly is to evaluate whether the risk could actually realize, whether it could actually occur, and thirdly, if at all it occurs, then what will be the impact. Correct. So it's a sequential flow. That first of all, let's see, check whether is it significant. Secondly, can it occur actually, likelihood of its occurrence, and thirdly, if it at all actually occurs, then what will be the impact. Then you will have to document the assertions that are affected. So whatever assertions you found that yes, it will be impacted, from the third point you found that okay, class of transaction, account balance, this all will be impacted. So you will be having to documenting everything. So document the assertions that you feel will be impacted, and then you will have to identify the significant risk which requires special audit consideration, special attention and response. That means what, those risks which were related to CDEF, unusual related party, right? Just now what we revised. So now out of all the risks that you found out, all the significant risks, you first found out the likelihood of it actually occurring it, and if at all it actually occurs, what will be impacted in all the assertions, and whatever it impacts, you have to document it, and then you will have to evaluate the out of this significant risk, which risk is actually the most significant, or the risk which requires special audit consideration, right? And then lastly, you have to inquire and document all the response that you receive from the management. Consider the internal control system, like what told was Dhanlakshmi. You have to consider the internal control system, whether it is adequate or not. Consider the nature of internal control system is in place, and also the operating effectiveness in mitigating risk involved. Any unique characteristics you find in the risk? Similarly, any existence of any unique characteristics in CTABD? In CTABD. Just go through this answer again, very, very important. Can be asked. Steps for risk identification. And then also go through this examples for like example high value inventory. That means in jewelry shops or diamond shop, you will find that okay, the inventory is very small or looks very small, however it's carrying higher value. Similarly, complex contractual agreements that we entered into, I entered into with Kapil, then Arnab, and then Pooja, then they entered into something else and coming back to me, right? So any sort of contractual agreement, absence of paper trail, there is no proper audit trail, paper trail, large percentage of sales coming from one customer. That means what, there is a concentration risk. It means what, your revenue is concentrated to particular one client, and if that client falls out or backs out, then you will be impacted majorly. So concentration risk should not be there anywhere in any entity whatsoever. Specifically in banks, NBFC, we have a monitoring requirement, regulatory legal requirement from the RBI as well. So just go through here till here, go through this. These are the indicators of completeness, or could be a misstatement with respect to existence, or indicators of misstatement with respect to recording, indicators of misstatement with respect to cutoffs. Just go through here, then we'll start with risk-based audit. Then we'll start with risk-based audit. So now let's start with risk-based audit. Risk-based audit. What do you understand by the word risk-based audit approach? It's easy to comprehend. Try at least. Risk-based audit means, overall broadly you can say, yeah, tell me, what are you thinking? Risk-based audit.
Sir, after assessing the risk, the audit should be based on how significant the risk is and how to eliminate the risk.
Hmm.
Based on the risk, we'll audit it.
Based on the risk you will audit. So you will tend to give attention or more attention to which area? The areas which have higher risk or areas with lower risk?
Areas which have higher risk.
Higher risk, right? So similarly, here also risk-based audit will be what? The audit which is based on risk assessment. So we assess the risk, and then accordingly, wherever we find that here the risk is more, we apply more resources, we apply more time, we apply significant necessary timing, nature, or resources whatever we have in those areas particularly, and we try to come out with those points which relates to the risk, or higher assessed risk. So we tend to give attention to the higher assessed risk rather than low risk. That is what is risk based audit. Something which you could relate to your study, right? You follow ABC sometimes. So ABC analysis, what do? You feel that okay, these are the areas which will be asked for more marks. That means those are more risky, that needs to be paid attention much more than other chapters, suppose. So if you are following that approach, ABC analysis, ABC approach, that is what is exactly here also, risk based approach. Wherever we feel that okay, this area particularly cash, or suppose any sort of foreign exchange transactions, so these areas or these transactions seems to be much more riskier as compared to other normal transaction. So there we will pay more attention. That is what is your risk based audit. Risk based audit, you can see, is divided into three steps. Sorry. So it involves three key steps. You have to first assess the ROMM in the financial statement. So in the financial statement, you will be assessing by identification of the risk. You will be assessing risk of material misstatement, something which you did already above, right? Steps in risk identification. So you followed those steps to identify the risk, and then you ultimately came out with the assessed ROMM, assessed ROMM. Then after, based on the ROMM, the significant ROMM, you have to design and perform the further audit procedure that respond to assessed risk and reduce ROMM in FS. Which essay are they talking about? Essay standard A, standard on auditing. Which standard on auditing are they referring to? Quickly tell me. In the second point and in the first point also.
Sir, in second point 330.
Yeah. And in first point 315.
315.
Correct. So you have to assess the ROMM as per SA 315. Then as per SA 330, you will be responding to the assessed ROMM, and reduce those ROMM to the financial statement as to an acceptable low level. And lastly, issue an appropriate audit report based on your findings. So overall, I could say what, it's nothing but audit. It's nothing but simple audit. However, it is based on risk based. However, it is based on risk that you identify, significant risk. You will tend to pay more attention there as compared to other areas. So see here, audit should be risk based or focused on areas of greatest risk. Analyzes audit risk, sets the materiality limit. So you analyze the risk of audit. If you risk of inappropriately giving an inappropriate audit opinion, you then set your materiality level based on your audit risk analysis, and accordingly develop the program that will be allocated to larger necessary resources. That there your resources, your staff, your timings, everything which has been allowed will be then be circulated among this audit program. And then risk-based audit is essential element of financial audit, both in attest audit as well as audit in financial statement, audit of financial statement, and transaction involving evaluation of internal control. So they are saying that RBA is relevant both while you are doing this statutory audit, financial statement audit, attestation function, and similarly when you are doing internal control system checking. Both at both the places, RBA is relevant. RBA is important, and it provides indicators of risk as a basis of opportunity for improvement of auditory risk management and control process. So that is nothing but a sort of intro, right? They are building up the foundation, not that important. In performance audit, it is the risk to delivery of activity, scheme, program of entity with economy, efficiency, and effectiveness. So they are referring to PSU chapter here, which deals with what, economy, efficiency, and effectiveness in the case of performance audit. So you will tend to learn performance audit in the PSU chapter. And which reminds me to tell you that tomorrow I'll be giving you recorded session of PSU chapter. Fine. So everyone, please see the entire video. It is around 1 hour each. That means two videos of 1 hour each. So in and around 2.5 hours, you will be able to complete the entire PSU audit. So please go through the lecture and revise accordingly. For tomorrow, it will be a recorded session. And then Saturday again, we'll have some elongated sessions. Now let's come to audit risk analysis. So it could be the risk could be arising because of the error, or it could be arising because of fraud. We all know the difference between error or fraud, right? Error is by mistake, fraud is intentional. Now comes RBA process is presented in three distinct phases. The first was being risk assessment. Do you remember the first phase is SA 315? Then the second phase is response to assessed risk, that is SA 330. Response to assessed risk. And thirdly, the reporting. So see, RTP May 22 question, you can see just beside it, RTP May 22 question, Padam Limited is engaged in the business of manufacturing of carpets. The management has increased the focus on internal controls. Management discussed with the statutory auditor to ensure the steps required to be taken so that the statutory audit is risk based. That means what, he wants to do your statutory audit as a risk based audit and focused on areas of greatest risk to the achievement of the company's objective. That means you want to focus only on important areas, important significant areas. So name the key steps and phases involved in risk-based audit. So what will be your answer? Those three steps or three key phases. What are the name the key steps and phases? So these three key phases or key steps. One was risk identification, right? Then response to assessed ROMM to in the financial statement to bring the ROMM to an acceptable low level, and thirdly the reporting. Then they are also discuss the steps to be taken for the risk assessment phase. That means what? The first phase of the RBA. Here they are wanting this answer. The first phase of the RBA, risk based audit. First phase, you will have to identify risk, assess the risk assessment. So you'll perform further, first of all, client acceptance or continuous procedure. Do you remember SA 2110? What are the examples that will examples that the requires auditor to withdraw from the engagement? Do you know this answer to this question? Examples that require auditor to withdraw from the engagement. Examples of matters which may require the auditor to withdraw from the engagement. Yes, quickly tell me examples
Sir,
of matters.
limitation on the scope.
No, 4 points were there, 4 points. Limitation of the scope must be 1 point, but I am particularly asking in reference to SA 220, where they where they said, recall, try. Yeah, then Lakshmi. Yeah, Suneshwaran is correct. Pooja is also correct.
Management
Management what?
मैनेजमेंट का ये पता चल गया तो प्रिंसिपल ने बोला कि इथिकल मतलब अपन कौन सा इथिकल रिक्वायरमेंट फॉलो करते हैं तो मैं फॉर्म छोड़ के चला गया तो कॉम्पिटेंसी टीम कॉम्पिटेंट नहीं रही
Right. So that was
इंटीग्रिटी
with
नहीं थी
respect to
मैनेजमेंट की
integrity of the management, competency of the staff, ethical requirements. Do we follow the ethical requirements? And with respect to independence, right? So these were the four matters which we should have saw before acceptance or continuance of client relationship. And similarly, they have also given this as examples of matter that may cause firm to withdraw. That means if there is no integrity, if there is no ethical requirement being followed by us or by the entity, or similarly there is no independence or competency of our staff, so then that might lead for us to withdraw from the engagement, or that is some certain 4 points which we also need to assess, check before acceptance or continuance of client relationship. So first of all, in the risk assessment you will perform what? SA 220 procedure, right? SA 220. Then you will plan overall engagement, SA 300. Then you will perform RAP to understand business and identify the inherent risk and control risk, SA 315. Then identify the internal control procedure and assessing their design and implementation. Internal control procedures, you have to now check whether they are adequate, whether they have been implemented or not. That means both operating effectiveness as well as design. So internal control, again you can relate this to SA 315 only. And then assessing ROMM in the financial statements. So whatever risk assessment procedure you performed here, now you found certain ROMM in the ROMM in the financial statement. Now you have to assess the ROMM in the financial statement. Then identify significant risks that require special audit consideration. More or less same points that what we saw in risk identification, steps in risk identification. So particularly pay attention to both the answer, contrast both the answer, try to figure out what points are here but not there, or there but not here. So once you start comparing, contrasting, matching, revising again, then only you will be able to retain, right? And then communicating material weakness in design and completeness of IC to TCWG. ऐसे बोलो ऐसे number. Communicating material weakness in design and implementation of IC to TCWG.
260, sir.
265
265, not 260. 260 deals with communication with TCWG. 265 deals with communicating deficiencies in internal control, letter of weakness. Do you remember?
Yes, sir.
And then making an informed assessment of ROMM at financial statement and assertion level. So now you have finally arrived at your ROMM, that yes, this is my risk of material misstatement, final assessed. risk of material misstatement. So again, let's discuss. First, I did what SA 220 compliance procedure I followed, where I checked whether we should accept or continue with the client or not. Then I went through SA 300 planning. Then 315 RAP to understand the inherent risk and control risk to identify the ROMM. So therefore, for that matter, I identified internal control, whether they are implemented properly and whether they are designed properly. And overall, I got to know the inherent risk as well as control risk. That means I started with assessing the risk of material misstatement, assessing the ROMM. Thereby, I got to know that there are certain risks which require more than the normal conversation or more than the normal consideration. So that risk that requires special audit consideration, risk that requires special audit consideration. And then you will find what if there is any material weakness. So SA according with SA 265, you will also communicate those misstatements or weaknesses in the internal controls. These are my risk assessment. First phase. There are three phases of RBA. First phase we are done with RBA first phase, which is dealing with what risk assessment. Now SA 330 risk response. Design and perform the further audit procedure. Design and perform the further audit procedure, which will help us to design or respond to the assessed ROMM. So matters the auditor should consider when planning audit procedures include. That means the question will be asked that in the second phase of RBA, where you have to perform the risk assessment. No, sorry, not risk assessment, but what? Response to assessed risk. The risk that you have already assessed, now you have to respond to those risks. Then what all matters you should consider while planning those second phase procedures. What all matters you should consider while planning the procedures mentioned in second phase of the audit. So procedures that you will be performing here is very simple. I have told you in the further audit procedure. In the further audit procedure, we are here left with what? TOC. That means what? Compliance procedure. Yes or no? Similarly, we are left with what? Substantive procedure. Substantive procedure, we are left with what? Test of details of transaction and analytical procedure. And analytical procedure. So they say in the first point that there could be assertions that cannot be addressed by SAP alone. This occurs when there is highly automated controls with little or no manual intervention. This I have explained it already. Just give me the example which I gave in the class. Tell me the example which I gave in the class for the first point. Bolo bolo. The example which I gave for the first point. Clear, right? So mark RBA very important. Mark the risk based audit very important from chapter 3, and also that steps in risk identification. Now come to next point. Internal control system, nature, scope, objective and structure. Nature, scope, objective and structure, internal control system. So nature of internal control, you will see that they have given the definition of internal control. Definition of internal control as per SA 315, internal control system means any process which is designed, that means you are designing the process, or then after designing you are implementing the process, and then also after implemented you are now maintaining the process. You means here what? TCWG and management, right? TCWG management and of course other senior employees, senior personnel to provide the reasonable assurance about the achievement of an entity's objective. That means what? We want to achieve the entity's objective, and whatever be the entity's objective, for that objective we prepare internal control system, design it, implement it and maintain it. We means TCWG management and other personnel. So again, process designed, implemented or maintained by TCWG management and other personnel to provide the with reasonable assurance about achievement of entity's objective. What could be the entity's objective? Entity's objective could be with regard to SECR. With regard to SECR, that means safeguarding of assets. That means entity wants their assets to be safeguarded proper in a safeguard manner. Similarly, E for effectiveness of efficiency. E for effectiveness and efficiency. C for compliance with all laws or regulation. That means you don't want to incur any non-compliance with any sort of law or regulation. And lastly, your financial reporting should be reliable. You should achieve a reliability in your financial reporting. So these are my 4 objectives with respect to the any entity. And entity's objective with regard to these 4 points can be achieved by internal control system. It's nothing but a process which is being designed, implemented and maintained by TCWG management and other personnel for achieving of objective of the entity with regard to SECR. That is the nature. Then if you come across the scope wise, what do you think? Whether internal control system, or when you are going for checking of internal controls, what do you think? You should check only those internal controls which relates to financial statements, internal controls which relates to financial statement, or there in our scope it could also be with respect to other than financial statement controls. Example, suppose you are going for an audit of hotel. So hotel financials, everything you will check, but do you also need to check whether they are following the ISO or whatever standard, FSSAI standard, or whatever way they have been rated as 3-star or 5-star hotel? Are they following those standard or not? Are they complying, or are they just making the rice, yesterday's rice today also? So everything has to be seen. Internal control scope wise, if I say, I'll have to check with the laws and regulation with any other sort of regulatory requirement, and also check with any sort of requirement that they need to comply for them to make it operating entity. That means for them, in order to be operating in nature, what all regulations do they need to comply with. And also in our scope as an internal control checking, we also have to see those as well. That means we are not just to be dealt with accounting controls, but we also include all the administrative controls leading to management's authorization of transaction. These controls will include what? Production method, time, motion study. That means how much time you are taking for each and every activity. Motion study, is there any redundant activity which can be reduced or eliminated, right? Any sort of faltu ki redundant activity which can be reduced. Similarly, production method you will check. These all points are covered in your internal control system. It is not, and not just only with respect to financial statement. It's also respect to pricing policy, quality control, work standard, budgetary control, policy appraisal, quantitative controls. However, what comes under administrative control will only have a remote relationship with financial records. Like I told you right now, FSSAI compliance, food, whatever. However, the hotels are rated. I don't know which authority or regulatory body actually rates the hotel, but according to them, whatever be the condition that needs to be complied with. So all administrative controls have a remote relationship with the financial records. However, these administrative controls will also have to be evaluated by the auditor while checking internal control system. So just go through the nature, scope. Then we'll start with objective of internal control system. So let's come on to next point, objective of internal control system. So internal control system objective, and also we saw just now the objectives of the entity for which they are implementing internal control. So internal control are meant to design such as or implemented so as to achieve the entity's objective, particularly with respect to these 4 points SECR. However, we will be achieving these four objectives of the entity by first achieving the objective of internal control. So if the internal control purpose is okay, if they are implemented properly, if they are operating effectively, so through that we will also be implementing, or we will also be achieving the objectives of the entity with these four matters, with regard to these 4 points. So therefore we will first study how internal control system objective can be achieved, or what exactly is the objective of internal control system, so that you are able to achieve your entity's objective with respect to those 4 points. Are everyone getting the difference? Should not get confused. Objective of internal control are these 4 points. Objective of internal control, please pay attention to the heading of the answer, very important, in specifically in chapter 2 and chapter 3. So first is transaction should be executed only and only after authorization. Management authorization could be either be general or special authorization. So generally general authorization means, suppose they have given you the authority to transact for up to 1 crore. Up to 1 crore you can transact. So generally they have authorized you by BOD, board of director, or whoever has given you the authority. Generally they have authorized you to transact up to 1 crore. However, for more than 1 crore you will require special approval, risk SEO1 approval, risk SEO2 approval, or any sort of approval which is there in your entity. So either it should be general or it could be specific, but however there should be proper authorization. Only after then the transaction should happen. Then transaction should properly be recorded in appropriate manner to permit preparation of financial information and to maintain accountability of assets. Then thirdly, with respect to assets, they say that assets should be safeguarded from any sort of misappropriation or use or any sort of disposition. However, they also say that there should be a physical verification at regular intervals and appropriate action should be taken. So you can just draw this chart for the purpose of your memory, for the purpose of retaining the answer. Very simple to break the 4 points in first two points, two parts, and then quickly recalling all the both the points from each of the 2 points. Done, 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 done. Yeah. So just now I told you internal controls system scope wise I told you it not only deals with accounting control but also deals with what? Yes, also deals with administrative controls, right or not? Just now I told you it also deals with administrative control. So now we are going to study objectives of accounting controls. Objectives of accounting controls. So in the internal control system you have both in accounting controls as well as your administrative control. But specifically with respect to accounting control objective, whatever controls might be there in your SAP or your in your accounting answer, accounting software, whatever be the case, there you have to not see administrative but only what accounting control objectives sought to be achieved by accounting control system. Definitely right. It can be achieved only through any accounting system. So how do you ensure that all these accounting control objectives are achieved by your accounting control software or your accounting control system? So you have to ensure that all transactions are recorded, real, properly valued, timely recorded, posted, summarized, properly classified, disclosed. So if I just want you to remember those points, I can simply tell you that these 4 points deal with journal entry. Journal entry in class 12th. Do you remember journal entry? We used to record, then realize, and then check whether it is value, its value is properly recorded, and the timely recording of the journal entries. Similarly, then we posted in the ledger. We used to post it in the ledger and then summarize in it trial balance. Summarize it in trial balance, and lastly, properly report, properly classified and disclosed. That means what? Properly classified and disclosed will be what your reporting on financial statement, profit and loss, balance sheet, cash flow statement, right? So that is your accounting control objective which you sought to be achieved by your accounting control system. This has come in May 2010. Then again after 5 years it came in May 2015. And then again after 5 years in May 2020 exam did not happen. Right? So May 2020 exam did not happen. So we could expect that anytime it can again be asked. It can again be asked. Any doubt? Any doubt? Just go through that again. Yes, now come to limitation of internal controls. These are what? Inherent limitation of internal controls. Inherent limitations of internal control. So internal control system provides only reasonable assurance and not absolute assurance. Definitely yes, absolutely correct. Right? It cannot provide absolute assurance. It can provide only with reasonable assurance because of inherent limitation of audit. Definitely inherent limitation of internal controls as well. So what are the internal inherent limitations of internal control? So it says it might so happen that okay, yes, you are there is an internal control properly implemented in the system. However, the procedure what you perform is incorrect. So procedure you perform is incorrect. Suppose the procedure is P2P procedure. Now in this procedure we can implement all the controls that we want. However, if this procedure itself is incorrect, activity itself you are performing incorrect, then it's wrong. Inadequate procedures being performed. Then manipulations by management with respect to transactions or estimates and judgments required in the preparation of FS. So it could so happen that management are manipulating with the transaction or any estimate or judgments which is required in the preparation of FS, thereby overriding the internal controls. Ultimately, internal controls should be placed in order for the management also not to manipulate. But if they are able to manipulate the financial statement figures, with particularly with respect to those transactions which are subject to judgment, like examples 540 SA 540 accounting estimate, account estimate balance. Now these transactions or estimates are subject to be manipulated by the management all the time. There is no strict guideline, regulation, rules anywhere with respect to that. Then you might also feel that cost of internal control is very large or very huge, and I instead of this internal control, the benefit that I'm deriving versus the cost that I'm incurring, I don't see a major difference. I don't see a major difference, and therefore it could so happen that this, because of this limitation of internal control, your internal control system provides only reasonable assurance and not absolute. Getting this? Then management's consideration that cost of internal control does not exceed expected benefits to be derived. Yeah. So what could be the cost? Suppose employee expense. If suppose I give you an example, when I was in internal control, internal audit department in L&T, we used to be a team of 35 to 40 people in the southern, in the central region for Mumbai, and then we used to perform internal audit, go to some other places, sometimes in wherever the projects of L&T are ongoing. Suppose New Raipur or any sort of smart city that you see are built or taken up by the L&T. Similarly, the Mumbai development, or there could be a lot of developments by the L&T. So whatever they are developing, we used to go for internal audits for those places as well. And don't you feel the cost of travel, cost of employee? We were almost 30 to 40, including our managers, which used to charge a lot. Again, expense, and then CEO. So all this cost can be undervalued as compared to your the benefits that you will be arriving at, or overvalued, sorry. Then possibility that person responsible for exercising internal control could abuse the responsibility. That means what? Suppose I gave you the responsibility and now you abuse the responsibility. I gave you to check this is all numbers before submitting it, but you fail to check. That means what? You are abusing that responsibility which I entailed upon you. Similarly, circumvention of internal control by collusion with employee party outside entity. Collusion with employee party outside entity. So suppose what can happen is, I told you an example of segregation of duty. Do you remember SOD? SOD, segregation of duty. Now suppose I am checking the cash. That is, I am in the cash remittance department or payments, cash payments department. I am collecting the cash collection department. And Nikita is suppose is into debtors accounting department, debtors accounting. So we both have separate SOD, separate access control will be there. It won't match, and there should be proper SOD in line. However, I can anyway, you know what, collude or combine or you come up with the idea that I and Nikita could be together, and then we could maybe check or maybe sort of override the internal control. That I could tell that okay, fine, I'll be collecting this much cash and you don't record this entry. Thereby combining our both efforts, we would be able to teaming and leading. We will be able to do what? Teaming and leading, right? So possibility of circumvention by collusion with employee or collusion with parties outside India. There could also be sometimes human error, and obviously no controls have. Do you have over and over unusual transaction? You cannot have controls over unusual new transaction. Example, crypto, right? You cannot have much control upon that. These are still to be regulated, which will be issued by the government. They will tell you, and then accordingly you will decide accordingly. So limitation of internal control, the memory technique is clear. It's very simple. You are telling to your girlfriend or you are telling to your honey that yes, you are a chartered accountant. So I am a chartered accountant. See, honey. So I means here inadequate procedures being performed. M say manipulations by management. C say cost ज़्यादा लग रही है. Cost is more. A for abuse of that responsibility. Then again C with collusion with employee. And then honey में H and N are only described or prescribed, but rest are silent. So H for human error and N for no control over unusual nature of transaction. Clear, everyone? Inherent limitation of internal control. Now the structure of internal control, you can see SOD. What is SOD? Authorization of transaction. Either it could be general or specific. Adequacy of records document. This will go through tomorrow also. I'll ask you the question. So please pay attention to these points. Then accountability and safeguard of asset and independent checks. Yes, so today I won't be taking much of your time. It's going to be a short session only. We'll wrap up. We'll start with components of internal control, and just mark one thing as homework, one more thing as homework. It's very important. You ought to do this even if not nothing else you are doing. But this come to fourth point, information system and communication. Come to fourth point, information system and communication. Yeah, so go through this line, mark what is the difference between this answer and areas to be examined, and in this answer what all is the difference. And also we have done this one more answer with respect to online uh, sort of online shopping business. We have done this in chapter 2. So go through last third question, I believe. Last third question in our notes, in our Sampurna book. Last third question that dealt with what? Online shopping. Kind of having the same points. Kind of having the same points. So quickly compile this in notes or whatever form you want to compile. But you have to go all the three all at once. All three all at once. This one, then this answer, and that answer. Online shopping wala answer that has been asked one time in exam. These two hasn't been asked till now, and I believe that if asked, they will simply be reciprocating this line. And if they write methods and records, then that would be different. And if they require or they write procedures and records, then that would be different. So it is more or less same. However, there is a slight difference. I want you to note the lines, what the difference is, and also go through the concept, what they actually want to convey to you. And if at all it any doubt, come back to me on Saturday. Okay, tomorrow it will be recorded. Now we'll just go through this components of internal control, which I've already told you. Do you remember 5 components of internal control? Quickly tell me. 5 components of internal control. Yes. Bolo bolo. Now do you remember? Risk assessment process, control activities, monitoring of controls, and your information system. Just now what we saw below, information system control, right? That is a component of internal control system. Similarly, I told you the brain of internal control system is what? Control environment, CE, control environment. The most important component of internal control that sets the tone of the entity. Sets the tone of the entity means what? Could build an atmosphere of in the entity, atmosphere of trust or whatever sort of atmosphere that is being built up by the control environment, tone of the entity. So in the control environment also we have 7 more elements. So in the internal control system we have 5 elements, 5 components. Control environment, then your risk assessment process, information system, monitoring of controls, control activity. These are the 5 components of internal control, which you can, if you are forgetting anytime, you can just go through ram se control. Ram se control. So R for risk assessment process, A for activity control, control activity, or you can say M for monitoring of control, C E से control environment, राम से कंट्रोल का इंफॉर्मेशन सिस्टम ले लो, ऐसा था कुछ. So you can just update that lastly with information system ले लो. ठीक है. So in the control environment now we have further 7 elements. So as I said, control environment is the heart and soul, brain of the entire internal control system. So it has to be correct, it has to be right, and therefore they say what? It the communication process, the communication flow within the entity, the channel of communication, it should be integral and properly deal with ethical values. That means communication and enforcement of integrity and ethical values, whatever be the ethics or the integrity sort of thing, that should be properly communicated and enforced within the entity. Then organizational structure, you should tend to know what is your structure, who all are coming under you, who all you need to report, so organizational structure, appropriate lines of reporting has to be followed. Then your assignment of authority and responsibility, that means what, you will be assigned with what authority, also you will be assigned with responsibility. Definitely if power comes to you, the responsibility also comes, right? Do you remember this Spider-Man dialogue? With power comes great responsibility. With power comes great responsibility. So that is what they are also trying to say, assignment of authority and responsibility, both. So authority also you'll get, but also with power comes great responsibility. So you'll also be assigning with what, responsibility. Then participation by TCWG. So how are they actually performing or participating in your control environment? How are they conforming, or how are they adhering to the all the internal controls within the entity? Are they complying with the laws and regulation? Are they complying with other sort of controls? And then what is their philosophy and operating style? Operating style, are they more aggressive? Are they conservative? Similarly, philosophy. That means what do they believe? What do they believe in? Do they believe in volume growth, or do they believe in margin growth? It could be anything. So if I am talking about profitability, then it could be either their philosophy could be either with volume growth, or could be they leading with margin growth. Either could be the philosophy, or both could be philosophy. So you have to decide the philosophy of the management. How is the operating style within the entity? Is Are they more aggressive or are they conservative? That is all you have to consider. Similarly, all the HR policies and practices, whether are you getting promoted in regular intervals, promotion is based on your performance linked bonus, your selection of the client, or selection of the sorry candidate, recruitment, all these procedures, payment, HR policies has to be on top for you to keep your control environment very good. So for you to keep your control environment a good control environment, you need to be having a good HR policies and procedure. And then lastly, you need to have your within yourself a commitment to competence. The employee should be having a commitment towards competency. That is how you set the control environment. That is how you set the tone of the entity. Clear? So you can just go through this all these points as well is within what they have written. If at all they ask you elements of control environment, you will have to definitely score these 7 points. Let's just try to learn these 7 points. So first 3 points I have grouped separately. Then other 2 points I have grouped separately, and lastly other 2 points. So first 3 points is with respect to organizational structure. So first 3 point is with respect to organizational structure, where the point itself, one of the point itself is organizational structure. So organizational structure, then in the organizational structure, the communication should happen. Communication of integrity and ethical values. Communication of integrity and ethical values. And then the authority and responsibility. Who has the authority? Who has the responsibility? Who has the authority? Who has the responsibility? Authority and responsibility, that is more or less all the 3 points relates to organizational structure. Then the other 2 point relates to TCWG and management. That is how much are the TCWG participating in the internal control system, how much they are conforming to the controls, they are adhering to the controls, participation by TCWG. And management की क्या philosophy है, management की क्या operating style है. That is will 2 points are with respect to what, management and TCWG. And lastly 2 points are with respect to employee. Employee, how are the HR policies and practices being performed in the entity, and employee, how are they committed to competence to achieve the competency. So first 3 points is with organizational structure, then management and TCWG, and then lastly with employees. I hope you are able to recall. You will be able to recall by revising again. Just go through the points what they have written inside also, and then go through this homework. I'll be asking the question straight away tomorrow on Saturday class. I'll be straight away asking. Everyone should be able to give the answer. Everyone, no tolerance, zero tolerance if you are not able to give the answer for particularly for chapter 3 all the questions, and particularly for this question which I have told you. Also I can ask from chapter 2, that was with respect to the last third question that I was telling you. So please go through these 3 homework which I am giving it to you, and also the structure of internal control also I gave you as an homework only, right? So this also I gave you as an homework. Please go through this also. And I hope everyone has given the test. If not, please do give it by today. And I have till now not received any sort of mistakes that you have committed. I have not received from anyone. I want it that you all write a mistakes in short. Answer one. This mistake I committed. Whatever mistake you want to write, it will help you only. You will not at all commit the same mistake again. You will tend to forget after some time that okay, I committed this mistake in test. But once you jot it down in a piece of paper, you will not forget. That is my guarantee. So I want that from everyone for this as well as for SA 200 series, 300 series SQC1 test. I'll be uploading the suggested answer today. If those who have not given the test till now, please don't see the answers. Try to give it like what you have given in your exam scenario. Try to give just like that and then come see the suggested answer and give it to me. We can then also have a discussion if you all want. Right? So tomorrow the recorded lecture will be given. Please go through that. It would be around 2.5 and then we'll meet on Saturday. ठीक है? Any doubt you can just ask or later also you can ask or ping. Yeah, Sunny, you are telling something?
No, sir. Just saying bye.
Okay, bye then.
Thank you, sir.